Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 4th of September. And it's back to school, and it has to be said, the joy of not having to go back to school never fades with the years. Starting off with the FTSE 100, you can see that we're just trying to break out of this bull flag. It looks like a mid-move consolidation bull flag either side of the 50-day moving average around 75.15. Above that, on an end-of-day close basis, and we're looking for the market to head up to the top of that falling trend channel from back in February, 76.60. This stage only back below the floor of the flag around 74.40 would really delay the recovery here and suggest that we might have to head back down to the mid-73s. But at the moment, looking for the bull flag breakout. End of day close through 75.20 should do it and give us that move towards 76.60. Nice RSI bounce that we had on Friday, which was the signal that we would head higher today, which was mentioned over the weekend. On to the DAX, and here looking at the market trying to get through the 50-day line. That's around 15,900. Want to see a proper clearance of maybe 16,000 psychologically. That would break the late or the mid-August resistance there and take us back to 16,500. Best case scenario at the moment is up to 17,000 by the end of next month, which is the top of that December rising trend channel, although obviously September or October, not really known for big rallies in the stock market. RSI bounce off neutral 50 here as well, so hopefully we are on our way through the 50-day line and beyond. On the downside, the worst that we can see is 15,600, which is the floor of that rising trend channel from back in December. Moving on to the Dow, and here you can see that we're closed obviously for Labor Day, but just for a marker for tomorrow, 50-day moving average 34,700. Want to stay above that on an end of day close basis and then hopefully retest the highs of July, August later this month. Downside here hopefully limited to 34,200 at that October 2022 uptrend line. On to Bitcoin, which is disappointed, let's say, over the recent past. We're still struggling at the floor of that rising trend channel, the January uptrend line there around 25,600. And looking for at least another attempt at breaking the 200-day line, 27,500 over the first half of September. RSI not looking great, looking rather floppy in the upper 30s, and so that does suggest there is a risk of 25,300 breaking recent support and a move down to the floor of that broadening triangle from March as low as 23,400. But at the moment, just hoping that we'll hold on to the 25,000 area, which was, after all, the support back in June. On to the small caps, and small for choice today. Actually, could have mentioned about 20 or 30, I think, but very much ahead of the pack is Artemis. I've said already this is one of the most outstanding charts of the recent past. The rally started with an unfilled gap to the upside, and we've had, at least in the last month, now 4 unfilled gaps to the upside. I don't think I've seen that for many years, if at all, in a stock. So this is looking particularly impressive. Our target here up to 2.6 pence by the end of the month, and the way things are going, looks as though it could get there by the end of this week. After that, obviously, then we're looking to retest October resistance as high as 3.6 pence. Upside here valid while we're above resistance on the way down, which was at 1.6 pence. So above 1.6 pence, that old December peak. We're looking for 2.6 and then maybe 3.6 after that. On to Aura, which is not quite as spectacular as Artemis. Nothing else could be, but not too far away in terms of the action here. We had the unfilled gap to the upside, or the filled gap to the upside actually turned out in June, and we've had an unfilled gap to the upside through the 200-day moving average today, which is pretty impressive. Above recent support around the 13 pence level, looking for 20 pence and retesting 2023 highs by the end of this month. So we're probably just waiting for that 200-day line to start rising as well. Moving along to Bushveld, where there's a bit of a buzz in terms of it turning around, and that buzz seems to be correct at the moment. Bullish divergence, breaking out of that falling wedge. So we've got a couple of big ticks in terms of the upside here. Initially up to a line of resistance, which I'm going to draw now, which is up towards the 3 pence level, that triangle there from the end of July. But really looking for the shares to head up to the 200-day line at 4 pence. by the end of next month. Obviously looking for 3 pence by the end of this month, but the bullish divergence work there with a bear trap included. One of the best stocks of the summer to date has been Beacon Energy, and here we've had the shares now resuming their rally. V-shaped bull flag, unfilled gap to the upside that we had last month, and building on that, hopefully we'll get an end of day close above 0.24, which will then take us up to a possible target 0.35 by the end of this month. The target there derived by a resistance line from back in back in 2022, the early part of last year, and as long as we're above 0.18 in the floor of the latest bull flag, looking for 0.35 over coming weeks, ideally by the end of this month. 50-day and 200-day moving averages both rising now. We had the rally start with a bear trap gap reversal, and the run up to a golden cross over the next couple of weeks should be enough to get this stock over the line, or at least up to the line. A stock which has been an unlikely recovery situation, to some at least, is Canadian Overseas. Here we had a little line of resistance there from last month, which we've broken really to start this month, which is pretty impressive. Top of the channel there up to 6 pence, and looking for that maybe as soon as the end of this month, while we remain above the 3.5 pence area. The RSI has been above neutral 50 now since the end of July, which is pretty impressive. On to 88 Energy, which hasn't featured here for quite a while, but we've broken out of this falling wedge from the start of the year. That was around 0.32, and above that, accompanied by bullish divergence, looking for the 200-day line at 0.5 pence initially, and maybe on a 2-month view up to 0.68, which obviously sounds rather ambitious, but why not? That could be hit by the end of next month, hopefully, while we remain above that 0.3 pence area. On to Falanx, which I haven't looked at in years, it feels. Here we've got a situation where the shares are gingerly trying to recover, and we'll see how they're doing that now. We haven't been above the 50-day line properly since last year, December last year, so we're breaking above that at 22 pence for the first time. We had a nice sideways shuffle ahead of that break of the 50-day line, so it looks as though the sellers are exhausted. And, well, they should be after the decline we've seen in the shares. And basically, top of the channel there from the end of May up to 33 pence, so looking for that by the end of this month. Moving along to GreenRoc, and here the picture is one of breaking, well, there's two neckline resistances. First was at 4.3 pence, the second one, that peaked there at 4.6, and above 4.6 we're looking for 6 pence as soon as the end of this month. Nice turnaround there after the higher lows that we've had basically since March for the shares, well, I suppose apart from that little dip that we had last month. And looking for that upside, especially while we're above the 4.5 pence area, as I've said. Moving along to MetalNRG, another stock which has come back from the abyss, let's say. Here we've broken a line of resistance there from the beginning of the year. That was at 0.07, broken the 50-day line at just under that as well. And above 007, let's say we're looking for 0.11 pence at the top of that broadening triangle from back in October. Should see that by the end of this month, given the rather keen rally that we're seeing at the moment and the big breakout after quite a long time in the wilderness. Metals 1 is next, and if I can type out the right letters, you'll see that we're in a rising trend channel there from December. Nice little bull flag developing at the moment above 2 pence. We had a gap close buy signal last month, rising 50 and 200-day lines at 2.8 pence. Looks as though it's well nailed on by the end of this month, while we remain above the 2 pence level. Did cover mobile streams last week. I think I've covered it a couple of times now as a potential recovery. Shares are already up 32% in the recent past. We broke out of that falling wedge there at the end of last month, 30th of August, and bullish divergence as well. In fact, double bullish divergence with the double bounce there for the RSI. We're now above the 50-day line at 0.09 and looking for us up to 0.18 by the end of next month at the top of a broadening triangle there from back in March. So let's hope that mobile streams gets on its way and hopefully doesn't have a cash raise to upset the recovery there. Moving along to Plexus, which has been the gift that's kept on giving. Unfilled gap to the upside that we had back at the end last week of last month, actually the 22nd of last month, and shares never looked back from the top of that gap there at 4 3/4 pence. Initial target here was up to 6, and then it was up to 10, and above 10 we've been looking for 14 pence, which hopefully we'll get over the next week or two. The overall picture here, that of a recovery back towards the highs of last year, so we're already back above last year's high at 10 pence, and looking for the previous resistance on the way down at 14 over the near term. On to a stock which was in the news today, Physiomics. Here the picture is that we've broken out of the base that we had after the massive gap down in June. Broadening triangle there from May, heading towards the 2 3/4 pence area. That should be hit hopefully by the end of this month, especially after today's news. I'd like to see an end of day close above the top of that gap there at 2.05 pence. If we can get that, then we should be on to 2.6, 2.7 relatively quickly. The rally here started with an unfilled gap to the upside and bullish divergence. So again, that same combo working for this situation. Wanted to look at a stock which doesn't have much charting material, but what's interesting here is we had a rally here from £1 to £1.90 on the first iteration of the rally, and came back to £1.70. So let's say we're looking for a 90 pence rally from £1.70, which according to my calculations would be £2.60, while we hold above £1.70, sort of like a measured move call on there. Obviously, again, as I said, not much charting information to go on, but let's see if that actually works. And you've got the stop loss there at 170. Ideally, we stay above 190 on an end of day close if you're fussy on that situation. Good news today from SDX Energy, where anytime there's a spud mentioned in your RNS, it's got to be a good thing. Here we've got bullish divergence, so lower low for August, but higher RSI trace, and we've had a gap as well, so it's a bear trap gap reversal. One of our favourite setups, and largely because it tends to work. Here we're looking for a retest of 6 pence, which is basically July resistance, maybe 6.5 by the end of next month, while we hold above the May floor at 3 3/4 pence. On to the last two. The first one, something which has been a bit of a horror story, Tremor International. Here it looks as though we've got bullish divergence on this flag formation. I suppose you could say it's a falling wedge. We need to break through 167 on an end of day close basis, which is quite close now. End of day close above 167, we could be looking at heading back to not only April support at £2, but the bottom of that gap there, the August gap at £2. So both of those signal that we could be heading back to £2. And in terms of the stop loss, probably at this stage, a little bit of resistance there in the upper 150, so above 158, looking for £2 on Tremor. On to a stock which I covered yesterday, and we can see that today it's only up 46%, which is obviously quite a result. We were looking for the shares to rise off the back of that extended bullish divergence. I think $25 billion was mentioned in an RNS a while back, and it seems to have kicked in, as has the directors' buying of the shares at 0.3 pence. So obviously that was not a bad trade. We were looking for 0.7 pence, and it looks as though we'll get that by the end of the month, and obviously the way things are going, could even see that by the end of this week. Stop loss on this at the moment, probably back at resistance on the way down at 0.42, so above 0.42, looking for 0.7, and the 50-day line also rising, so everything looking rather rosy there at Wildcat. That's it for me today. More updates tomorrow.